Holy boner candle, we are back, baby. Time to make some freaking money. Let's go. So now that it looks like summer could be actually a good month, and maybe that the sell in May narrative isn't here to stay, but was something that I noticed was not going to happen way back on May 3rd, we're going to jump in and actually see where we're going next. Where's ETH? Where's Bitcoin? Where's Solana? And where's some other meme coins that we're going to be looking at so that you guys can be on the right side of the next movement in the market. All right, so today we're going to jump into ETH first because Ethereum just had one of the biggest, if not the biggest, boner candle that it's ever had in the market, period. You actually see that if you look at the actual candlesticks. Now, we've had big market moves before, but Binance actually said just today that this is the biggest volume candle they've ever had on the platform ever. So this is very bullish. Now, if the ETF is happening, someone's on the inside and somebody knows something, because it seems like everyone who thought it wasn't going to happen is going to be wrong, just like the people we told were wrong about Bitcoin's ETF. Now, let's look at what actually happened. Well, we did have this 3-in setup candle, and I circled that and I posted it on Twitter. So if you're not following me on Twitter, please start doing that, because I do this not for me, but for you. And what we actually had happen here is very simple. The 3-in setup candle plays like this. You have a big down candle, and then you have an inside candle and then up. So I've talked about that on previous videos. So if you're watching, you'd actually know. And how you play this is very simple. You put your entry at the top of that candle, right? And you would have been, oh, maybe it's going into resistance, but that doesn't matter because we would be putting our stop loss below the wick of this one, right? So you would have looked at that and you'd be like, oh, coach, I'm in a loss of 7%. Oh my God, I'm scared, right? But the reality is that this trade plays out so often on Ethereum and on Bitcoin that you almost have to go into it. Where we're at with ETH now is we broke a little bit below our level here, but we actually respected the level that we were at in the past. And how you know that it's a level from the past is very simple. We go on here, we look at the wicks down here, and a wick is a liquidity pocket. A pocket of liquidity is very simple to understand. It's where the price comes down to, and there's a lot of people that are going to have buy orders there, and it generally shoots it back up, which is why there's a long wick down. And if you look at where it held from here, you can see that this has been a level where we've respected all the way back since February, over here in February, over here in April, right? We never really broke below that level. So it used it as a very strong support, similar as we jump on the trampoline I've talked about in the past. So as we're looking at Ethereum, we're looking at this long downtrend that we've had since March, right? And I drew this just last week saying, you know what, like this looks as like pretty much like if it could have turned into a flag, like a bull flag, which is generally what it did, right? This is how bull flags look. We had a long move up, we had a downtrend, and we break out and we start going on to the next trend, which if we're looking at my chart and you guys have been here for a while, we're looking at between $47, $48, and $6,700 as our next big move or next big leg. And if we get the ETF approval, my levels that I've been drawing up here are on the chart right there based off of Fibonacci levels at the 618, 2618, 3618, 4618, 5618, etc. And you can see those are those levels. So if we get an ETF approval, it is very possible for us to get to 9 to 11,000 and potentially up to $15,000 this cycle. And some people say even 20, but I would always love to under promise and over deliver for my community because that makes you guys happier. And then it will give you places to take profit as well. So that's what we're looking at for Ethereum. Now, will this happen over summer? I don't know. No one knows, but what I would expect for us to come back down and retest this level here. So us to come maybe to 3,500 because that was a huge move up. People are going to take some profit, come back down, and then we can move on the next leg. But we're looking at those three levels at 3,920, 4,400, and 4,800 for us to go up and continue the movement going. So ETF approval very likely, new all-time highs also very likely. Whether that be in summer, that's the hard question because usually summer months are down months. But if we go back to last bull market, even though I said, yeah, it was a COVID bull market, we couldn't go out, it's still very likely that it could play out the same way. So that's what you should think about right now. Get your plan ready. But if you're not in Ethereum and you wanted to get in, look at that $3,500 level as a potential area for you to get in and get the ride up because there's still 5x potential there. All right, so next up we're going to go to Bitcoin. We're going to see how did that level up and did it have also a 3-in setup? But we actually did see that. So let's go in here. I've been drawing 3-in setup and 3-in side downs for you guys for a long time, trying to get you to understand this is an actual trading strategy which has been back tested all the way to the start of Bitcoin, and it's almost never failed. It's like over 70% of the time you'll be right with this trading strategy. And so I tell you guys this because it actually works, but it's a very patient trading strategy. Same as ETH, you saw it came back down. Bitcoin didn't come down as far as ETH did. So we had the 3-in setup, and I did mention this on May 3rd. I said, hey guys, look, Bitcoin is in its position right now where we have a 3 inside up, and it did go down to the bottom of the cloud like I explained to everyone it might do, and then we had this reversal candle. So I talked about, will it be a sell in May and go away thing? On May 3rd, I realized we have a macro trend reversal. So on a daily chart, when you have a 3 inside up or 3 inside down off of a level of support or off of a level of resistance, generally that is a macro trend reversal, meaning that we're going to go from a bearish trend to a bullish trend, or a bullish trend to a bearish trend. So we saw over here we had a 3 inside down, we went to a bearish trend, went all the way down. Had you entered here at 66, you'd be entering right here if you waited till that point where it actually did the 3 inside up, you'd be entering and exiting with a $3,000 to $4,000 gain, right? Now, if you were less greedy, you may have just taken profit at 59 and made $7,000 per BTC. Now, on a 3 inside up, we had a huge candle. Some people say, oh, it's going into resistance, but I don't care about that because it was off of support. Now what we're seeing is that you'd be entering, you'd put your stop loss down here at 56, 56.5, something like that, and then you'd be looking for a longer term thing. So it's going to take weeks or months for you to get that next big move. What happened was we had from May 3rd all the way till now a move from, we went to like 63, came back down to 60, but let's say you entered at 63. Today you'd be up about $8,000 per Bitcoin yet again. So you're looking at a trend and something that actually can help you, but you have to be very patient. If you want to make money tomorrow, go into meme coins. If you want to make money so that you become rich in a year, go into these types of trades, because these ones you'll do maybe 3 or 5 trades in a year, maybe 10 trades in a year, but they're going to be longer term trades, and they're ways to actually be able to go and enjoy your life and not stay in the market and go, oh, I'm drinking Solana and meme coin. Oh, I'm actually Solana. I don't know when it's going to go up. It's going to go down. It's going to go up. It's going to go down. It's stressful. This is much less stressful. But if you're someone who loves the meme coin game, tomorrow I'm going to be dropping an epic meme coin video to kind of help you guys understand what you could do to make quicker gains in the shorter term with smaller amounts of money, and pull the slot machine lever and see which one actually hits. I want to go back to May 3rd just for a real quick second and why you should be following this channel and how I'm actually trying to help you. So on May 3rd, I talked about 10 hours till we close, a sexy macro trend reversal candle pattern. Now, a lot of people do videos and they tell you after the fact. I'm trying to tell you guys before these big moves happen what you should be looking for. This is a great example of it. So on Bitcoin right here, you could see that there was that 3 in setup playing out. And if we go to the actual chart, this is the exact same thing. You can even see the level that I showed here where the arrows were coming down. That is exactly the same part on my chart. So I don't change anything. What I'm trying to get you guys to understand is when I post these types of macro trend changes, you can be on the right side of those macro trend changes. Another example is right here on Ethereum. Let me just blow this up. On Ethereum, I said the exact same thing. Look, we're checking it out. Ethereum also has a 3 in setup on horizon off major levels that held during the most recent dumps, which you can see the liquidity pockets down here. And then I said a 3 in setup off of support is a macro trend reversal candle pattern. It means that we could be in store for some follow through here. This would be great for all. So what I'm trying to get at here is May 3rd, I posted about ETH and Bitcoin. May 3rd, I wanted you guys to understand what was coming. Now you're seeing the follow through. Patience will always lead you to a higher conviction than actually trying to make money quickly. But there's obviously other things that we can look at now. So a couple of coins that I've been talking about recently are Lif3 Paid. So I just want to go over them really, really quickly and why I'm in them. So Lif3 I've been talking about since way down here at 0.008 cents. Right now it's had a nice move up to 0.12 cents. Why I like it is because the people behind it are very real. They have a lot of real assets. And not only that, it's that the people in these are actual OGs, and the people around the projects are OGs, and they're not selling into small amounts of gains, right? What I'm looking at here is a person who helped make very, very big gains on other projects. There is a very real ecosystem built. There's a layer 1 coming, but there's a whole DEX and liquidity protocol and all this stuff built already, ready to go. But not only that, they have the people in their network that also have very, very large pocketbooks. And the people that are invested also have very, very large pocketbooks. So this is something to keep your eyes on for sure. Has a great model behind it, and that is early because I'm telling you pretty close to the darn bottom. And if you want to get into stuff near the bottom that you can hold and kind of wait for it to turn out, I've bought tens of thousands of dollars in this coin, and I know other OGs that have bought hundreds of thousands of dollars in this specific coin and this specific project. Keep your eyes on it. Try and tell you now. Don't make me tell you I told you so. Another one I want to tell you guys about, which had a really, really good run all the way up to 40 cents this cycle, and then it came back to 10, is Paid Network. Now, if you guys are looking at how they operate and the new changes they've made, there's a reason to be very bullish. And I actually swapped out a lot of the coins that I had in my portfolio just yesterday that I was like, they're not really doing very much, and I don't have a lot of conviction left in them. So I swapped out all these coins, bought about 100,000 Paid yesterday, just alone. And why I did that was because this model actually makes a lot of sense. And I'll explain to you what the model is. It's very simple. When you buy Paid, right, and you hold it and you stake it, and Paid raises capital. So all the platforms that raise capital raise a bunch of money for the retail guys, right? And when they take that money and then they give it to themselves, and then basically the projects don't really buy back the token, they don't burn the token, they don't actually put it back into the ecosystem. Now what Kyle's done at Paid is very, very interesting, because not only does he put it back into the ecosystem, 100% of all the profit that they make from all these raises, which is about 10% per raise, if you raise $1 million, $100,000, all these platforms raise hundreds of millions of dollars in a cycle. So let's say Paid raises, I don't know, 300 million over the next 12 months, right? Which is very, very realistic from what they did last cycle. If they raise $300 million and 10% of that is profit is going to go back into buying back their token, they would buy $30 million of their own token. And if you understand how the projects work, when you buy back a token, the price moves up faster than the one-to-one. It moves up quicker because every time you buy it, you take supply out of the market and you add in ETH or USDT or BNB or Solana or whatever, right? So how liquidity works like that, it means that as you buy in, the price actually appreciates faster. So for Paid to go up a 10x from here, I think is very easy. So if they added $20 million to what they have right now, the price of the market cap says 33 million, but it would actually be quite higher. And there's no vesting, right? Which is a huge thing that we're going to talk about next. There's no vesting, right? All the people got all their tokens. All the tokens are on the market. The team tokens are almost all invested. So like, there's no one actually here to sell on you at this point. Obviously there's holders that are there, but most of them sold during the bear market as the price came down from $6 to 1 cent. Now it's up, went from 1 cent to 40 cents, had a huge retracement. People sold off their profits, and now it's kind of bottomed out and is starting on the rise. When you look at what they're doing, you have to understand the main piece of information is they're going to be buying back and burning tokens. Removing tokens from supply is very bullish. Having no tokens vesting is very bullish. Having the people who stake getting into projects that they want to get into that are curated and vetted is very bullish. So I'm looking at, not this because I worked with the team earlier in the last cycle, helped with tokenomics and stuff. I'm looking at this because I understand there's a revenue model, which most projects don't have, and actually most projects, even Cake, don't even buy back more than $1.5 million of tokens themselves a year. So if you actually look at the model, it's actually very, very bullish because Cake is a DEX, and this isn't. So that's what I think you guys should look at. I think there's a huge opportunity here, and it's something that has a very low float, very low FDV, and has a very large upside. I think this is why you guys should be looking at this as a very good potential project to look at, because it was $6. If it goes back to $6, it's a huge win for everyone involved. All right, so on that topic of high FDV, low float, I've been talking about this for very, very, very long time. So Binance came out with a report just yesterday, and if you didn't see it, you really should be looking at this. This is a very important piece of information. And if you're a retail investor and you don't really understand tokenomics, and you don't really understand how FDVs work, and you don't understand what low float means, pay attention right here, because it's something I've been harping at, and it will literally not wreck your bags. You will get destroyed if you're a retail investor if you don't understand this specific thing. And that's that Binance encourages small and medium crypto projects to tackle low float and high FDV. What that means is if you have a project and you launch and you have 5% TGE tokens coming out and you have 95% tokens coming out after that, that means literally 2,000% is going into inflation. And if there's a 2-year vesting period, the project is going to have 2,000% more tokens in circulation within the end of that vesting period. What that's going to do is make all the tokens that came out day one that shoot up into high valuation is literally going to wreck you, because every time someone gets a token, they're really high up and there's more dilution, meaning there's more inflation, which you guys understand makes the value of whatever you're holding less valuable. So why I focus mainly, and the list that I shared is always based off of fully diluted meaning all the tokens are out, is because then you don't have someone who can dump on you. Same reason why I like Paid right now, because no one's there that has a huge bag that can just dump on you as a retail investor. And that's the huge opportunity. And so they talk a lot more about this, and we can go into it longer, but I don't think you guys need to. You should read the main parts of this. You go and we'll put the report below. It's a great read if you're someone who doesn't understand this very well. It will help you wrap your head around tokenomics. So we go back to September, right? And we look at what I was talking about. And if you look at what I said specifically in this thread, and you go read Binance's report, which is now a year and a half later, you're gonna be shocked at how much information I basically gave you for free so that you wouldn't be stuck in this trap. And this is how I actually think of how I'm going to invest in projects, right? So pre-sale lockups and cliffs, right? If we don't have 20% TGE, I don't really want to get involved. Now I do go in some of them, but the reality is that I probably shouldn't anyways, because most of these 10% 3-month cliff and 15-month vesting projects are going to get they're going to get shit canned. And if you look at things that I've invested into, and I can give you some examples like G3 and SA, I like the projects a lot, but they have so much dilution of tokens that it's very hard for them to keep the value of the project. So that's something you should have to look at, right? And I'll give you guys the whole thread, the pump and dump tokenomics and the front running of the token models and the team and advisor getting tokens too fast and staking and emitting too many tokens to add more supply and more supply. Look at this thread. I'm going to post that as well. No, I only had 40 people bookmark it and only 71 people liked it, but this was such a high value thread for anyone that wants to learn what to and how to invest in the cycle. Now to end off, we all know about Craig Wright. We all know that he was full of crap, but right now it's been ruled by judge as of yesterday, May 20th, that he lied about creating Bitcoin and faked the evidence to prove that he was Satoshi. Now we all knew this, but now we can all give him 2 middle fingers into the sky because that guy is a piece of shit, and we actually now know for sure that he was never Satoshi. He was only looking for clout and to be so important to everybody else. He was just another egotistical maniac. All you guys need to understand, when I don't like someone in this space, there's a reason for it, and it's a reason that I don't want you to get wrecked. Now that everyone realizes who these people are and that it's very prevalent, we need to work together to stop letting people like this into the industry so that they hurt retail. We need to stop the low floats and the high FDVs. We need to work together to help each other. And tomorrow in the meme coin video, we're going to talk about why those memes are doing so well and why it's much safer a lot of the time for a retail investor like yourself to jump in, and why actually a lot of the funds and other KOLs and big players in the space join those movements because they're making far better gains because of this exact fact. Thanks guys. I know it's been a little bit of a longer video, but I really want to help you guys understand a lot of conceptualization and where we're going in the market. So I'm going to share with you great memes, the thinking behind the memes, and how you can start identifying which ones have the trends and which ones won't, so you can get involved in the short quick gains in the casino, and then I'm going to show you what to take your casino gains and put them into real projects.